Hello traders, this is a recap video for Friday, June the 5th. And on Friday, the context going into the session was that previous day, on Thursday, market went from daily 20 to the gap. The gap that market was made here between Tuesday and Wednesday. And our points of interest for Friday were the same, the gap and daily 20. And market again, like on Thursday, was on the upside, rejected from the gap, making a marginal higher high, meaning the uptrust above the previous day high, went down toward the daily 20, which was tested outside of the regular trading hours in the afternoon part when US markets were having a sell-off on NFP report. Now, this is on daily, and now let's go down to the smaller time frames, and for this recap I'm going to use the combo chart, CFD 5-minute on the left side and futures on the right side. Here in the morning notes I wrote about inventory correction, which is one of several basic concepts that we are using every other day. Market opened below the previous cash close, meaning previous index close, and pre-market range was below it, meaning net short. And in that case, expectation is of the inventory correction of the pre-market session, meaning a move up toward the previous cash close, which we got together with a very decent day trading reaction from it. In the lower part, there were some ideas about potential setups, both in the dips to watch section and in the rips to watch section. For example, higher odds would be gap fill to previous close, and then preferred setup on the upper zone would be a false breakout, and that is exactly what we got. Now, let's start this recap with this right side, because on this right side you can see the usage of VWAP, session midpoint, and pre-market range. Pre-market range is this orange rectangle, which after the pre-market session is over, I just extend to the right so I could then see potential reactions from that range later in the regular trading hours and in the after hours. And you can immediately see here, for example, when market went down, it bounced from the pre-market high and this orange line, which is session midpoint. Session midpoint, and this blue line is VWAP. Here they are, both are free indicators, and I'm using the default versions of it. On the way down, what market did here was a 1 point move below the pre-market low, meaning they made a spring. The spring was made in the US RTH session, which is unusual time for the spring, and yet it worked for a bounce up to where? To pre-market midpoint. So this dashed line here is the midpoint or halfback of this rectangle. So both upper end, lower end, and midpoint were useful on Friday. VWAP was also useful on Friday when they lost the VWAP, when they dived here at the US Open. You see what the time is. This is the time of the US Open, 15:30 Central European time. After the US Open, when they went back inside the pre-market range, found acceptance there, they were below VWAP and below session midpoint and below pre-market high. And this, what they did, this exactly the same move was present on Monday as well. And that is the point of these recap videos and of the setups gallery, to understand repetitive market behavior and usual setups, because your trading career isn't going to be made of out of the blue moves. It is going to be made on bunch of base hits and some home runs on repetitive usual setups. Okay, let's stick to this chart. So here, for example, this was a pullback long, and it was a pullback long when market went down after the open to pre-market midpoint, and this actually was a 61.8 of this move, regaining pre-market midpoint, regaining session midpoint, going higher. That would be this here. That was the long setup. This or this here was a short setup, the one that I showed on X. And this is the usual thing, uptrust above the pre-market high. Now, next thing here, what happened was this second push. And you see this second push, they lean on the opening level and pushed away from the pre-market range, meaning they were rejected above from the pre-market range. Then this line which I just drew, this is the line from the previous day high. Previous day high, which was also rejected from this gap, because both Thursday and Friday partially filled this gap. This gap is now even smaller, but still exists. And what is this? This was not only our predefined and preferred setup on this zone, but also uptrust above the previous day high. And once again, like said in the bigger picture video, overnight low, overnight high, or in case of DAX pre-market low, pre-market high, previous day high and low, and previous week high and low are always going to be references on which you can lean on and where market can make false or real breaks. In this case, false break. After that false breakout, market rolled down. So entry points here for the shorts would be this one and this one. On the way down, bounce from the pre-market high, then being acceptance back into the pre-market range and below VWAP and below pre-market high and below the opening level as well and below session midpoint. So once the price is here or here, and it already bounced from the midpoint, you're aiming down toward the pre-market low. And there was a bounce from said pre-market low because market made a 1 point move below it and regained. But where move died, it died at the pre-market midpoint, and then the market was rejected from the pre-market range. And I could very well make a mark here for this. Now, when we look at the CFD chart, first we could observe in the pre-market session how the market reacted from our first breakout point, which first was resistance here 2 times, then it was support, and then we got uptrust, we got pullback. This would be the pullback down toward the pre-market midpoint. This one, it was also toward the previous day RTH low, which was 24,841, while our level was 840, regaining that, going higher, and then also usual setup, gap fill to previous cash close. Everything on which I'm going to say usual setup doesn't mean that it is a setup that's going to work 100% of the time. It's usual, it means repetitive. While high expectancy and high odds setups are the ones on which you can add and you can also apply higher initial risk. This is very important in day trading and in trading in general to know where to hit harder, because rookies usually hit harder on revenge trading, not on usual repetitive setups. This would be this second pullback rejection from the pre-market high, and then, as was written in the morning notes, above 24,995, not 45, preferred setup on this zone 995 to above 24,945, meaning above previous cash close. The preferred setup on this zone would be false break. Guess what? We got that big spike going down, being short. You don't ask questions because that is exactly the same thing that happened previous day. Not something that happened back in 1956 one time. No, it happened previous day, and it happened many times before. And that's why you should go for these kind of setups. These kind of setups should be your top priority, to be engaged on repetitive usual setups. Markets roll down like previous session again from the gap where it was rejected, just like previous session, and then they went down, bounced from the pre-market high, and then observe just how many reactions there were from the previous cash close. So this one obviously could be used as a sell setup, and then to observe the post-NFP period, because every single time when we have NFP report or CPI, there is going to be the same line in the material that session can be divided to pre-NFP period and post-NFP period, and in the pre-NFP period, there can be hours of consolidation and chopping into the data. That was this here. But all of this were happening under the resistance. And on the NFP report, US 10-year yields spiked as well, and that was the initial thing that later turned into the sell-off on the US markets. And when you have a sell-off on the US markets and when DAX goes down with the US markets, that's a bad idea to go long on it. And you only longs that here were shown as these marks was the bounce from the pre-market high and spring below the pre-market low. So usual setups only, and that can be alternative as well. You could just sell these spikes and sell the rejections, and finally they rejected the move down below daily 200. Further, Friday is a very specific day, so if they go directionally on Friday, that's double no to fade, because directional moves into Friday can be selling into the close and also a signal that participants don't want to take weekend risk. So why would you then take a weekend risk? So that would be it for this edition of Friday Recaps videos. The screenshot for the setups gallery is going to look like this. This is also a text from the morning notes here about the NFP report, that it was a potential catalyst, and if anything happens on that move, US indices need to confirm or deny that move, and they confirmed the move, and after that we got a sell-off. Here is a detailed description of our setups, and here would be the excerpt from the morning notes, and every single day is covered like this. So the link for the StrayDogTrading.com, my website, is going to be in the description. If you're interested in the daily dose of DAX index, you can check my public profile on X as well, where I post charts, trade examples and ideas every single day. And that would be it for this edition of the recap videos. I hope you traded well on Friday, and as always, I wish you a pleasant weekend and good trading.